Isaac Newton had a remarkable career as a mathematician, physicist, and astronomer. However, his ventures into investing proved costly. In 1720, Newton incurred losses, equivalent to as much as $20 million in today's money. Reflecting on his experience, he is famously quoted as saying, "I can calculate the motion of celestial bodies, but not the madness of people." Newton was generally a long-term investor, who rarely altered his portfolio, except during the infamous bubble year of 1720. The South Sea Company, a joint stock company established in 1711 by the British Parliament, was at the center of the bubble. It was created to reduce national debt, in exchange for monopolistic trade rights with Spanish colonies in South America, Central America, and the Caribbean. Despite its limited profitability prospects, the stock price skyrocketed from £128 in January 1720 to nearly £1,000 by August. The company primarily facilitated payments to stockholders, using funds received from the government. However, speculative fervor was fueled by promises of massive future profits from South American trade. Many stakeholders, including the government, the company, and its shareholders, had a vested interest in inflating the stock's price. The scheme aimed to persuade holders of government annuities to convert their assets into South Sea stock. These conversions were highly successful, with annuitants rushing in without fully understanding the terms. At the beginning of 1720, Newton owned approximately 10,000 shares of South Sea stock, valued at £13,000. By mid-1721, his holdings had increased to 16,300 shares, representing his entire investment portfolio. Initially, Newton liquidated most of his shares in April 1720, realizing a profit of £20,000. However, as the stock price doubled in the following weeks, he succumbed to fear of missing out, FOMO, and reinvested all his profits, even cashing out other investments to buy more shares. He resumed purchasing South Sea stock in May and June, selling his Bank of England shares to finance his acquisitions. Newton continued buying shares, well after the stock had peaked around mid-September. By the year's end, the stock price had returned to its early 1720 levels. His most notable transactions occurred in mid-September, during a dramatic price collapse. Newton, along with other buyers, likely believed the market's plunge was a temporary panic, and that the South Sea Company held substantial intrinsic value. Having become a staunch believer in the company's prospects, Newton went all in. This series of decisions, selling, re-entering, and doubling down, ultimately led to a catastrophic loss of £13,000, wiping out his earlier gains and more.